Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 30th of March, 2021, and we're after 7 p.m., so don't worry about that part. For those of you that are subscribers to my paid research, you were sent the invite today to purchase your enhanced Bollinger Band course. All the ones with the paid subscriber will automatically get a discount. It's rather substantial, as you'll see. So I think it works out very nicely for you, and I love the course. The reason I like it, I learned so much doing it myself. It reinforced me. It gave me a verve again to do certain things. I enjoyed that a lot. Haven't done that in a while. Now I'm going to be turning my attention to when I'm going to start the WeChats. Remember, I'm going to do in the probably 12:30 hours, something like that, a short Zoom meeting. We're probably appearing it, and we'll have the chart action. You tell me what you want to look at. I'll do it. I'll give you my answers like that, rapid fire, what we see. That'll be it, and it's over. So it should be a lot of fun for us. So bringing on a lot of things for you. Today you ended up at least flat in these crazy markets, THCX, AMC, and GAME. They were flat to higher. As you can see, the stock indices were lower, but I think that's, again, this creeping interest rates. And what do I mean by that? You went up today to 177 and a fraction in the 10-year note before falling back towards the 172 level. But notice that the market's pushing out the top, then pulling back, not going as deep on the breaks. The last break just got barely under, I think, the 1.6 level, 1.6%, and now it's making the higher highs. It's what I call the creeping impact. And I think that goes until Europe gets their vaccines going right. The word right means more and more people getting vaccinated, where unlike the UK, which has done a good job, but you haven't seen that in Italy, France, Germany, I can go on and on, to Czechoslovakia. It's just a number of countries. Now, when that happens, if U.S. interest rates continue to do this, and remember, we have jobs data this week, and that might be a good number. They're looking for 1 million new jobs from what I'm seeing. So let's assume they get all this. That'll probably put pressure upward on interest rates. There'll be a point where the U.S. rates start choking the economy, competing for money in a different way. The dollar gets driven to too high of a level, and the other economies start coming in. That's what I look for. Are we there? We're not even close, but that's ultimately here. Is it in the lens? It is. I can see it at the end of the tunnel. In GameStop, you're fighting this battle at the 18-day average. You're trying to pick up momentum. And day by day, you're narrowing in these Bollinger Bands, bringing in a tighter and tighter market. Here's the good news for this. Remember, this was a stock that came out of nowhere with Reddit. They drove the price up to $500 plus, and then the market came down. But it's held a much better value than it did before, and they just keep bringing on other people to make this away from just that brick and mortar store. So there's been good things happening under the hood, we could call it. In AMC, okay, we pulled back from getting up here towards this 1480 level. We've pulled back into the $10 range, and the market's sort of finding itself. Any move over 1153 will give the market an impetus. You would then have higher lows, higher highs. Are we in a downtrend now? Yes. Are the pros selling the market here? I don't think so. And the reason is you have an oversold reading. I view anything in the slow stochastics with a reading under 27 is oversold. Now, embedded means both the red and the blue get themselves into a pattern here where they're staying under 20. You're not like that. You're nowhere near it. I just think you're oversold. But the trend is down. In PAVE, you know I'm friendly this market. I think it's just a question of when infrastructure happens, not will it happen. Even the Republicans want it to happen. It's the other programs that they'll have a trouble with. With another election coming up and things so tight, who's going to fight against infrastructure becomes the bigger issue. You'll say, well, how are we going to pay for all this? That isn't today the issue. The issue today is to get the job creation, get everything humming, then via taxes and whatever else we have to do, pull the rein back. It's a dance. You got to get up to go sideways. As we look at PAVE, you still have the pattern higher highs, higher lows, bullish. The market's over the 18-day average. This acts as a support zone. So where would resistance be? Duh. The upper Bollinger Band, 25-24. Are we overbought or oversold? We're overbought. So I don't think the market's locking in this type of momentum it did here when the market kept moving higher. It's trying to do that, but it's not even in the beginning thralls of it. It's just overbought. I'd look for resistance in that 25-24 zone. As for THCX, this market can't catch a break. It keeps coming down. It's trying to develop more sideways action, but the trend is down. The good news is, in this particular pattern, that you're so oversold, I don't think you're attracting a lot of new selling. That is not reason to buy it. That's just all that I'm saying. In SMH, you just keep hearing about the shortages everywhere on these semiconductors and what it's doing to the auto plants. Now, it's right now rotation from less selling vehicles to the better selling ones within a company's arsenal. But eventually it's going to be just less vehicles if they can't get this fixed. They've got the higher high, lower low, fighting a battle here at 232.83. When you look at the industrial sector, you've got the lower low, higher high, overbought. I think most of us are friendly this sector, but that's not the buying pattern in the chart at this point. At least that I'm seeing. In the energy sector, April 1st is the OPEC meeting. Do you really want to go into it? That's going to be your call. Right now, the fact that the market's staying underneath the 18-day average in red means the bias is down even though the trend of the swing line is up. When they fight each other, there's not much to do. A close over 51.01 will turn that trend back up because you already got the trend up, but you need the bias up. SPY, you've had a pattern of a lower low, higher high. You're fighting in a range that you had right here and you're overbought. Hard to want to buy a market that's overbought in this sideways pattern. Could it be a base or a top that's forming? It certainly could, but I don't know which. The emerging markets, have I not pointed out? I think I have for you for a long time. You're just in a sideways churn. And you've got lower highs. You're fighting to stay over the 18-day average, so you're keeping the bias up, and momentum doesn't know what to do. It's just sort of drifting right here. Not an awful lot one way or the other. GLD, what do I teach you to do on the first challenge of a Bollinger Band? I don't care if it's on the upside or the downside. Watch. I don't care what it does tomorrow. This is where I think the pros take money off the table. This is where I think they take money. That's where I think. There's nothing wrong with waiting and coming then back at the market if the trend is still down. But if you're asking me, could that be a thrust that where it's the thrust and it ends? At any point that can happen. Did we trend to get down there? No. You've had a higher high and lower low. This is just a whipsaw market, but it's a punishment market for those that are diehard gold fans, and they are being taken to the shed. You know that's been the case. In the gold miners, how could they stay up? And this is what they did yesterday if gold's going down. So you had an outside day up. Now, you took out that day's low, yesterday's low today. Often, when that occurs, until you get back over yesterday's high, the target is the lower Bollinger Band. So we'll see if that gets hit. Even in an oversold market, that's the target. TLT, pause time. I want to see the jobs data. It's like a song, right? And that's what this market is doing. So you have the trend up on the swing line, the bias down, momentum flat. Market's not foolish. The market's waiting. It knows it's going to get all these numbers starting to roll out from tomorrow through Friday. We want to see just how good are they good enough numbers. FXE down to the lower Bollinger Band. So you hit it here. I said that's where I think pros take money off the table. You bounced. Not much of a bounce, but in the process, look what we're doing. We have both numbers under 20, both under 20, both under 20. So you had 3 days in a row, got that? And now what happens is with that embedded reading, rallies start getting sold by the pros, and they keep trying to drive the market down, in my opinion, until the red line's back over 20. That's one of the ways to look at it. So if you're a paid subscriber of mine, you got the email. The rest of you, you'll get the email about the Enhanced Bollinger Band course tomorrow. I hope you take it. I think you're going to learn things you've never seen with this. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.